important thing is to be able to define which ones you can come to an intelligent decision on and which ones are beyond your capacity to evaluate.
In a world driven by consumerism and material desires, it's crucial to pause and reflect on your spending habits. But how? What if I told you that one of the world's richest individuals wants to reveal the reasons why you are poor? Wouldn't you be intrigued? Yes. Meet the most successful investor of our time, Warren Buffett, with his most important financial philosophy. So without further ado, join us to explore the 10 common financial pitfalls that'll keep you broke and poor. Number 1. Not investing in yourself, a priceless investment. Warren Buffett's words resonate with a profound truth. The best investment you can make is in yourself. Time and again, he emphasizes the immeasurable value of investing in one's education, skills, and health. This investment, Buffett assures us, lays the foundation for long-term success. To truly comprehend the weight of this advice, we need to look no further than Buffett's own journey. From an early age, he immersed himself in books, learning, and self-improvement. He studied under the legendary Benjamin Graham, absorbing the knowledge that would ultimately shape his investment philosophy. Buffett's life exemplifies the power of lifelong learning as he continuously expanded his horizons to become one of the most successful investors in history. Moreover, investing in yourself goes beyond academics. Buffett also underscores the significance of maintaining good health and building essential life skills. Number 2. Carrying high-interest debt, a wealth-destroying pitfall. Carrying high-interest debt is akin to walking a financial tightrope without a safety net. Warren Buffett famously stated that he had seen more people fail due to borrowed money and leverage. High-interest debt, particularly from sources like credit cards, poses a significant threat to your financial health. Buffett's emphasis on this matter is not a mere cautionary note. It's a stern warning against the pitfalls of excessive debt. Debt can amplify gains, but it can also magnify losses, turning minor financial setbacks into insurmountable crisis. His life serves as a testament to this principle. Despite his immense wealth, Buffett remains frugal and avoids leveraging his wealth to maintain a luxurious lifestyle. Number 3. Being materialistic, embracing the true sources of contentment. In a world consumed by consumerism, Warren Buffett's stance on materialism comes as a breath of fresh air. He reminds us that true contentment doesn't spring from accumulating possessions, but from experiences, relationships, and personal growth. The belief transcends mere financial wisdom. It reflects a life philosophy that many strive to embrace. Buffett's personal life is a testament to this principle. Despite his immense wealth, he leads a modest life, steering clear of ostentatious displays of wealth. The fulfillment he derives from reading, learning, and spending time with loved ones serves as a stark reminder of the genuine sources of happiness. In a society often driven by the pursuit of wealth and material possessions, Buffett's wisdom implores us to reassess our priorities. Number 4. Not continuously learning, the key to financial mastery. In a world of finance, ignorance can be costly, while knowledge is undeniably powerful. Warren Buffett's life story stands as a testament to the significance of continuous learning in the quest for financial success. The habit of staying informed and educated about financial matters is a cornerstone of Buffett's investment philosophy. As the adage goes, knowledge is power. Continuous learning not only reduces the risk inherent in the financial realm, but also creates opportunities. For Buffett, understanding financial principles enables him to make informed decisions that consistently yielded impressive returns on investments. Number 5. Being impatient, a hurdle to wealth building. The concept of wealth building often evokes images of rapid riches and immediate success. But Warren Buffett's advice challenges this notion. Impatience, he insists, is a formidable barrier to accumulating wealth. Buffett's words, "The stock market is a device for transferring money from the impatient to the patient," underscore the need for patience in wealth building. In a world characterized by instant gratification, the idea of waiting for financial success can seem counterintuitive. Number 6. Following the crowd, a dangerous trend. Warren Buffett's stance on following the crowd in financial matters is clear. It can be perilous. The words, "Our favorite holding period is forever," underscore his commitment to a contrarian approach. Following popular trends and market sentiments without thorough understanding can lead to substantial financial losses. Buffett's success in the financial world is, in part, attributed to his willingness to go against the grain. He doesn't follow market fads, opting for a deliberate, well-researched investment approach. His strategy doesn't involve blindly following trends in unfamiliar stocks or assets. Instead, he advocates for diligent research and a contrarian approach to financial decisions. Number 7. Chasing greed and fear, the double-edged sword of financial decisions. Warren Buffett's sage advice shines a spotlight on the destructive power of chasing either excessive greed or succumbing to fear. Making financial decisions based on these emotions can have a detrimental impact on your financial well-being. Buffett's guiding principle, be fearful when others are greedy, and greedy only when others are fearful, is a timeless reminder for investors. Greed, when unchecked, can lead to impulsive decisions that prioritize short-term gains over long-term success. The financial market is rife with stories of individuals who chase quick profits and reckless abandon, only to find themselves facing financial ruin. Number 8. Living within your means, a pillar of financial stability. The distinction between wants and needs is a fundamental aspect of personal finance, and Warren Buffett underscores its significance. Living beyond one's means, whether driven by societal pressure or personal desires, can have dire consequences, leading to financial instability and mounting debt. Buffett's quote, "If you buy things you do not need, soon you'll have to sell things you need," serves as a stark reminder that a life of excess spending can result in a precarious financial future. It doesn't matter how much one earns. The foundation of wealth creation is built upon the difference between income and expenses. Spending beyond one's financial capacity is a dangerous habit that can lead to unsurmountable debt. The ability to discern between essential and non-essential expenses is a cornerstone of financial responsibility. This distinction helps in reducing financial stress, allowing individuals to allocate funds towards savings, investments, and securing their financial future. Number 9. Emotional financial decisions, a risky endeavor. Emotions and finance are an uneasy pairing. Buffett's advice emphasizes the peril of making financial decisions driven by emotions rather than logic. Impulsive actions rooted in emotions can yield unfavorable financial outcomes. When emotions guide financial decisions, investors may fall prey to irrational choices. These emotional decisions can manifest in various ways, from impulsive investments to selling assets out of fear driven by market fluctuation. Such actions often result in suboptimal financial performance. Buffett's approach of maintaining a rational, unemotional stance towards investment underscores the importance of detaching personal feelings from financial decisions. Number 10. The significance of understanding your investment. One of Warren Buffett's core principles revolve around investing in what you understand. He advises, never invest in a business you cannot understand. This counsel highlights the potential dangers of allocating resources to ventures that individuals lack the knowledge to comprehend fully. Investing in complex or obscure assets can introduce unwarranted risks into one's portfolio. Lack of understanding inhibits an investor's ability to make informed decisions, increasing the potential for financial losses. By understanding and avoiding these common financial pitfalls, we can take steps towards a more secure financial future. Thanks for joining us on this journey. Don't forget to like this video, subscribe to our channel, and hit the bell icon to receive notifications for future content. Until next time, keep building a prosperous future.